Okay. Hello, everyone. My name's Joshua Fouché. I'm a practicing emergency medicine physician, currently doing most of my work as Locum Tenens. And this is a webinar session hosted by the Locum Tenens section, of which I'm a counselor. And we're talking about how, when you're receiving 1099 income, how to go about forming an S-corp or incorporating for certain tax advantages and the basics kind of steps for forming a business structure. Um, and also on the line is Rob Moore. He's the section chair for the Locum Tenens section.
Hey guys, yeah, this is Rob. This is our second webinar this year. This is, I think, our overall ninth or 10th webinar that we've done. And I'm so excited about this one because when I started doing locums tenens, I had no clue how all this worked. It was very confusing, very daunting. And the general idea was that you could save a lot of money, but you had to go form a corporation. That sounded like an intimidating process. Thankfully, along the way, I found an accountant that acted as a good mentor. And now my effective tax rate is so low. I actually sent an email to my accountant yesterday and said, "Are you sure this is right? I'm going to get a refund of well over, well, I'm not going to say the amount, but it was well over $10,000. And that would not have happened if I had not formed my S Corp and had my good write-offs. So Justine is going to be speaking with us today, and I think Joshua has a little bit more to say before we get started.
Yeah, I'll just share as well that I've been doing locums for about a year and a half, and starting out, there is a lot of legwork you have to do to kind of understand how you're being paid and how to try and act like a business and save money. Anything from registering for a business account and registering with your state to keeping track of expenses, to deduct on your taxes and filing quarterly taxes. It's a lot to get used to if you're used to W-2 work and getting benefits from your job. Um, I think I even like tracked my mileage when I was on assignment for like most of a year before I realized, oh, that doesn't even matter if you're using someone else's rental car. You can't deduct that. So there's no point in deducting in tracking it. Um, but my first year I wanted to keep things simple. I was just a sole proprietor. And then I think Justine I've worked with for my taxes, and she had told me at one point that I should consider incorporating to save a bit of money. And then she reintroduced the idea to me while completing last year's taxes and kind of did some envelope math to let me know that it could really be a substantial financial savings. I think part of the way I'm doing locums is out of frustration with how business profiteering interests have infiltrated healthcare and kind of victimized doctors in that process. And so I think us learning how to be business people, even as small business owners, and using tricks of the trade to, get compensated in the way we deserve is really important. Our guest is Justine Zhou. She's the CEO and founder of the Zhou Agency. That's a full service tax advisory firm, I believe, headquartered in Chicago. Um, they specialize in designing and implementing tax strategies for individuals and small business owners so they can pursue their passions in life. And with that said, I'll turn the tables over to her and let her take it away with the rest of the presentation.
Thank you, Josh, and thank you, Rob. And Rob, I would say you do have a pretty good accountant. I'm happy that you are happy in October or September. Normally, this is the time people are crying, right?
I was shocked that we could depreciate my vehicle for so much. I got a $40,000 bonus depreciating my vehicle. I mean, that's amazing. So,
Yeah, and
yeah,
the
a good
100%
accountant
bonus
can do a whole lot.
is back permanently. So, yeah. Okay, maybe Josh will get a new vehicle next year. I'm kidding, Josh. Yeah, I mean, you only buy it. So what I always say is tax strategy is not just a list of things you do or you don't do. It's really your situation and what's good for you. So is S-corp really going to save you tax? It depends. And that's like a lot of my clients don't like me to say it depends. Like, what do you mean? Oh, I need to share my screen. Sorry, guys. Let's see. make sure it works. It's working, right, gentlemen? Okay, thank you so much. Okay, so is S-corp gonna save tax for everyone? Definitely not. So we always say it depends, right? But today I want to show you guys how it can save you tax. And then you can see whether you are in that category, right? Let me see what I can. Okay. So first of all, I think Josh hit a really good point. When you are 1099, you're no longer an employee. You are considered in the tax code self-employed. You have a small business. Whether you incorporate or not, you're still a business already. You're no longer working for someone, you're working for yourself. So people always ask me this question. So now, what expenses can I deduct? And my question to them, I think I probably talked to you. Josh definitely asked me that question last year. And I always ask you a question back saying, what cannot be deducted? You have to think in a broader sense that now you're 1099, everything you do to generate that income is deductible expenses. Well, if you have a W-2 income, your mileage on the car, if you work from home, or even take a meal, had to go out and do a meal or whatever, it's not deducted because when you are employee, all these are not deductible expenses. But if you receive a 1099 as a medical professional, you definitely should be able to like deduct your mileage, deduct your work meals, you know, maybe even your certifications, anything that help you to make that money. So you have to think very broad, right? That's the first step. Whether we should incorporate or should we stay as a sole proprietorship, it's not really at the beginning a tax question, more a liability protection question. So let's say I have a big W-2, but I have a small side job of 1099. And really there's no liability, you know, there's no liability in what I do. Do I really need to incorporate? What do you think, Josh?
I would say probably not. And I think most physicians, to weigh in, most physicians worry about liability from medical malpractice, which is typically, I think, a personal, even if you have an LLC or incorporated. But I imagine if your 1099 is very low, you have no motivation to incorporate.
Yeah, you're right. You're right. So in this case, whether you need a liability protection or not is when you decide whether you want to make your sole proprietorship into like a business. So when you have a business, it does help you to limit the liability exposure. But whatever the expense that you could deduct in the corporation, you can also deduct in the sole proprietorship. So I always say you don't set up a business just to save tax. You set up the business to really protect yourself from liability if you think there will be any. And it's a little bit different than the malpractice liability. This is more like a business general liability. You will always have a malpractice insurance, right? All of you guys, like me, I have this is professional liability, E&O. It's a little bit different. Okay, so if we decided that we do want an incorporation, which form of incorporation should we do? Let's see, my second slide is, there's normally, there are two entities you can choose from, the LLC or the corporation. In most of the states, if LLC is allowed for a doctor to open up as a business type, you should do LLC because it's much easier. For corporations, like I think the state of California do not allow doctors to open up an LLC. So you have no choice but do a corporation. Why is that? LLC just more flexible, easier to maintain, and less costly. That's all. And then the next step is whether you should do an S-corp. So both LLC and corporation can choose to file tax as an S-corp. So I do have a lot of people come to me say, I want to set up an S-corp. S-corp is an election you take for your LLC or your corporation. And the reason you select S-corp is this way, it's a flow-through entity, right? As a corporation, if you do not select as an S-corp, you will pay tax, you will pay double tax. You pay tax at the corporation level, and then when you take dividend, you have to pay tax again at the personal level. As an S-corp, all the income will flow through to your person, so you don't pay any federal income tax at the corporation level. That is why. And why S-corp? Because today the topic is really to show you how S-corp can save money, right? It's actually the first step is very simple. I want to do a mass example so everyone gets it. So if you are a single filer and you own I don't know why we put Illinois business, but I'm in Illinois, so it doesn't have to be an Illinois business, right? And your gross 1099 is $250, and you have $75,000 in all kinds of expenses that enable you to make that money. If we bought a new car like Rob, we would have $175,000 business expenses this year, right? Because we can take 100% bonus depreciation. Yeah. But in this case, this person didn't. So now net business income is 175. We're going to do two scenarios. One, just doing a sole proprietorship, not an S-corp, right? The other is doing an S-corp. So with a no S-corp, you just have a $175,000 income from your Schedule C. Schedule C is the schedule you use to report your gross income and all your expenses to arrive at your net income. As an S-corp owner, now you are a business, right? You pay yourself. You issue a W-2 to yourself, let's say for $70,000. And then your net business income will be a little lower because you paid yourself, the rest is so you have to think like this. I have $175,000, I pay myself a salary, the rest is net business income. All right, let's go to the next slide. So here's a very boring calculation. Basically, when you have no S-corp, what you do is you have your business income, you minus half of the FICA tax. Do we know what's FICA tax, Josh?
I don't remember what it stands for, no. I just know
Okay, sorry, you're not an accounting student.
no.
It's just Social Security and the Medicare. So we have to pay FICA tax, which is 15.3% every time we earn money. So the Social Security part goes to the Social Security income. The Medicare part goes to the Medicare when we turn 65. So as a no S-corp sole proprietorship, you have to pay 15.3% of that $175,000, which is in the payroll tax part. Did you see that? So that's $26,775. Half of that is considered a deduction on your income. The reason being, if you are a W-2 employee, your employer will pay that half for you. So you will say, Uncle Sam, it's pretty fair. What? They give you, they charge you that tax, but give you a deduction on your income. And then you also can deduct the QBI, guys. QBI is also becoming permanent from the big, beautiful tax bill. Used to be a temporary provision. It's called a qualified business income deduction. And then you also, anyone knows, you take a standard deduction. 2025 standard deduction for a single filer will be $15,750. So now your taxable income is 110. According to the tax table, your income tax will be $19,453. So altogether, you're gonna pay income tax and you're gonna pay the FICA tax. It's $46,000. When we get to the S-corp, you guys can see the big saving is on what? Is on the payroll tax, right? Because we're only paying ourselves $70,000. So you're saving almost $15,000 in payroll tax. You see the difference, right? 26 to 11,000. But because S-corp, you know, you have less QBI. Did you see the QBI was 35,000 when you are a sole proprietor? You only have 19,000 because only the profit portion qualifies for the QBI deduction. Because of that, you do pay a little bit more income tax. So you pay about $5,000 more income tax, but you're saving $5,000, no, not $5,000, $15,000 more on the FICA tax. So overall, if you look at the numbers, you save about $10,000 just in this simple case. And you can imagine when the income gets higher, the numbers will be different, right? And here comes, people always say that my next slide, is this very clear, Josh?
It all looks familiar, yeah.
Yeah. So it's just really by saving the FICA tax.
Mm-hmm.
So this is a nice chart that we did for you. The orange part is the payroll tax, and the blue part is the income tax. And I think this is where most people, when they start to get 1099s, they really get hit with the payroll tax. So I tell them, if you're not going to do an S-corp, you have to pay estimated tax, and you have to pay 15.3 first, plus the 20% income tax, plus the state. So it's like, people are like, well, 50% of my income go to Uncle Sam. That's what happens, right? So now you know that's two composition of your income tax on the federal form. All right. So this is a burning question. How do we define unreasonable wages? So in the previous example, you guys all see, right, that the less I pay myself, the less FICA tax I pay. I pay, right? So how about I just pay myself 5,000? It's not gonna work. Rob said, no, why?
I assume you're going to trigger an audit because you're not paying what somebody who does that job would make. I mean, even if it's a doctor who does not know how to negotiate in the slightest, if it's still considered reasonable for the market, then you can pay yourself that.
You're right. Uncle Sam is very smart. And I have seen S-corp tax returns for some of the business owners pay themselves $0. And that's a complete audit risk. If you pay yourself $0, you're definitely going to get audited. It's 100%.
Without interrupting your thing too much, it also, you lose out on doing solo 401k benefits. And so I actually benefit from paying myself a little bit more, but I'll let you get to that later.
Yes, you're right. That's on I think the next slide, we're going to talk about all the options. When you're S-corp owners, you have a lot of options on retirement. So that can also save you tax, right? So when we stay on the reasonable wages, so I feel like this. I've seen doctors pay themselves $50,000 to $100,000. So how much is your reasonable wage? You can always talk to a chat GPT in your area, and for the hours you spend, how much you're supposed to get. And there is a range, right? So if you're going with a lower range, you're good. Yes, Joshua.
Oh yeah, I wanted to chime in. I've been thinking about this as well a bit, and one suggestion I saw online was to look at what the VA pays physicians, which for like a full-time emergency medicine physician is much lower than you would make in private practice or working in a non-VA job. And this is a negotiation with the government to some extent, so you could use their example as a floor to possibly reference. Just an idea.
That's very good point, Joshua. You know why? Because I said it's a range, right? So if we decide to pick the lower range, is this illegal? I don't think so. So that's where you have some kind of a little bit of gray area, right? So that's why I've seen doctors pay themselves from 50 to 100. But there are times in the later of the slides I'm going to talk about, it's actually better to pay yourself more, because this way you can put more money into the retirement, right? So that's why I say tax strategy, never like a checklist or black and white, you should do this is the amount, you should pay yourself 70,000. I never would say that. I'm just, making an argument here to show you how the numbers work. So I think we all agree we should pick a lower range on the reasonable wages, and maybe check the VA. Is it VA hospital, how much they pay the full-time employees, right? Okay, all right. Next one, I want to ask you a question. It's a test. Maybe this question is for Rob. If I have another job and receive a very high W-2, do I still need to set up an S-corp for my business?
I would say yes, because then you can divert a larger amount into your retirement. You can divert the 1099 income into your retirement.
Okay. From a retirement point of view, you have a point, but for saving FICA tax, do you think you're going to save FICA?
You know what? I don't know that. I've worked only 1099 for the last 6 years, so I've actually never faced that problem.
It's just a thought game, because Social Security is actually capped at what? 175. So if you already have a job that pays you, let's say $400,000 as a W-2, and you have another, like say $200,000 1099, those are the times I normally do not suggest my client to do an S-corp, because you're not going to be able to save the S-corp. Save the FICA tax. And back to Rob, you can still do a pretty aggressive retirement plan if you are sole proprietor. You can still do it because the only portion you are going to do is the employer portion, right? Because the employee portion, you already did it with your regular W-2 job. Why would you do that? Because when you do the employee deferral at your W-2 job, your employer matches, right? Why would you say kiss money goodbye? And then when in your own S-corp, as an employer, you can still pay, you can still contribute up to 25% of your payroll. So let's say in this case, this doctor, we paid him what, 70,000. So they can do 25% of that as an employer contribution into a solo 401k, while he still does another W-2, whatever, right? But if he doesn't have that W-2, the FICA saving is huge. It could
I
be
think
more than 10,000.
for the people who may be new to this, I want to just reemphasize that point. This is a tax-free contribution to your retirement from your employer, which is you,
Yes.
to you. And you
Yes.
can get that money into your 401k and have a massive tax advantage. And I just wanted to emphasize that because that point should not be lost.
Yeah, so if we go back the slide, here is the S-corp income, right? If you contributed 25% of 70,000, I'm gonna do the math right now, 25. So you're gonna contribute 17,500 to your solo 401k, and that will reduce your income right here. It will be before the equal here, right? So you will have less taxable income right here. All right, let's go back to that slide. So my answer is no, because you can see very little on FICA tax. But I have to say Rob has a point that yes, you can do still can do the retirement, but as a sole proprietor, you can do retirement plan too. So the next thing actually I have is what retirement plan options are available for S-corps. I think we talked about solo 401k, right? You can also do SEP. SEP is not very popular right now. The main reason is because SEP is still considered an IRA, right? I'm sure Rob and Joshua, you're doing backdoor Roth IRA, right? If you have a SEP IRA, it will stop you. You cannot do backdoor Roth IRA while you have a SEP IRA, pre-tax SEP IRA. If you have an after-tax SEP IRA, that's a different story. But we're talking about pre-tax options right now, right? But it's still the easiest thing to set up, so people do that. And the SEP IRA can also go up to 25% of your earned wages. So if you pay yourself 70,000, you can do 25% of that. In the case I talked about, if you are sole proprietor, you can actually do 25% of what? 175. Because the whole 175 will be considered as an earned income instead of only the 70,000 as the earned income. And one last thing I want to touch base is, I don't know whether the two of you heard of, it's the pension plan. So you as an S-corp owner can create a pension plan for yourself. It's called a defined benefit plan. So most of you guys probably don't know pension because you're too young. I think my generation, some of us still have pension, some of them have a mix of pension and the 401k. The reason most people doing 401k only is because pensions go bankrupt, right? Because the company is using the money for something else. But imagine you create a pension for yourself. So people say, why we would do a pension? Guess, Josh, how much you can put in a pension maximum? What's the maximum amount you can put in your own pension?
I have no idea.
So I give you a number. So for 401k, the most anyone can put in is about 70,000. That's including employee and employer contribution. But in the pension plan, the most they can put in is 225,000. So if we're talking about a doctor have a 1099, $1 million a year, I've seen those. I've seen I've done their returns. So if they have that kind of income, that's when you not want to just save the $10,000 FICA tax. You want to save what? $200,000 on your income tax. So that's where it comes in. That's why tax is just like things change, numbers change. But the whole point of S-corp saving tax is really the core of it is you're saving FICA tax. Yeah, I think this is all my spiel, guys.
Cool. Thanks for that overview. Let me see if we can move into a couple questions now. TS wrote, what about contracting, demanding a S-corp and not LLC as a single member LLC taxed as a disregarded entity? I'm not entirely sure what they mean by that question. They followed up with, if you have 3 jobs, 17% employee and 17% 1099 income required, and third job can be 1099 or employee, which is 65% income should third job be 1099 or employee.
I will try, Joshua. I think the first question is a very common. People always say, I want, they need me to have an S-corp before they will even, set me up as 1099, right? But the point is, whenever you go to any state to register a company, you cannot register an S-corp because S-corp is a tax status, is a tax filing entity, is not a business entity itself. So when you go to any state, you either set up an LLC if you are allowed to. If you're not allowed to, then you will do a corporation. And then no matter what you do, you just elect S-corp. And the form name is 2553. You have to file that form and send it to the IRS so they know that you elect to have an S-corp. And when you fill out the W-9 that the company who's paying you, you will put your company's name and then the entity you have to pick S-corp. So it is still an S-corp. I hope I answered your question. And the second question, I am lost, Josh.
Yeah, I think they're asking if you have like 17% of your income is W-2, another 17% is 1099, and then you have a third source of income, which could be either or, which is better to choose. It maybe depends on the amounts of the income, but I think I think the decision would probably depend on say that job with the highest percentage of income, the 65% income job, does that have benefits that could save you substantial amounts of money? Keep in mind when you're doing 1099, almost exclusively, you have no retirement match, you have no group benefits in terms of insurance and things like that. So that would probably go into the calculation. On the other hand, if you're trying to maximize 1099 income, to avoid FICA tax and to fund a solo 401k because the W-2 income doesn't have any employer match or something like that, I suppose being more, favoring 1099 income might make sense, but it might depend on your individual situation.
Yeah, Joshua, I echo you. This is more like if you get a job offer, if they give you a choice of 1099 and a W-2, right? So the first consideration should not be tax, should be what are you getting? What is the real package, right? So if the W-2 job gives you so much things you want, maybe like Josh said, the employee benefits, right? And the retirement matching and all the stuff. And I also tell most of my clients who's jumping from a W-2 to a 1099, I tell them, you have to ask at least 20% more in income. Because as an employer, they save about 20% for you to go on independent. So you at least need to ask for that, right? You need that 20% jump on your income. Otherwise, you should not do 10 because you are paying your own tax and you don't have any benefits. But your tax benefit by having 1099 is not their business.
Yeah. I'd love to touch base on some of the kind of hidden things that you can deduct that you don't think about. I have a couple offhand and that I'd love to see some of the creative things that you have. But for example, every year you're required to have an annual meeting. And where you have that annual meeting is up to you. And so typically I have my annual meeting in Europe. And that becomes part of that becomes a deductible expense because every year we have to have that meeting. Another one is my health benefits. I, as the employer of Moore Mountain Medicine, have to provide health benefits to my employee, which is me, and I can write that off. So yes, you get benefits when you're in a W-2 situation, but you get to pick the benefits when you're in a 1099 situation. You can pick the ones that are tailored to you. So I mean, there's a long list we talked about the bonus depreciation on my vehicle. I had no idea we could write off, I think it was 40 or $47,000 on my vehicle in bonus depreciation. So are there other low-hanging fruit that you like to talk about that doctors tend to have that they don't think about?
Yeah. The annual meeting was a good one. That is for that reason, a lot of my S-corp owners actually have their spouse or their children as part of the owner. They can be a 1 or 2%, and then they can have an annual meeting together, right?
Yeah.
Because if you're just by yourself, who are you meeting with?
Yeah. Well, there's that as well. And then you have
Yeah.
401k contributions for them if you're paying them a salary. Now you get into the whole thing of, are you going to pay payroll tax for them? But yeah, there's the opportunity to pay them as well.
And then there's, if you add that as the together with the Augusta rule, which is you can rent your home to your business, right? As long as less than 14 days and you charge the regular, whatever the market rent, again, it's a range, right? And, you know, you don't have to report that income, but the S-corp can write it off as an expense, as long as it's reasonable, right? Everything is about being reasonable. What are you doing, right? And another thing I tell most people, whether you do an S-corp or not, when you're a 1099 employee, when you're a 1099 independent contractor, you really should have a separate business account, separate credit card, just so that it's easier for you. You don't have to pull your hair when the tax time comes. I don't know what I did. So before you spend money, think, is this going to help you with your business? Like, you know, whatever you pay your accountant's fee, whatever other educations you take to be better at doing what you're doing, all these are going to be your business expense, right? So before you even spend the money, think through these, you know, these thoughts, right? And the bonus depreciation, a lot of people only know that it's real estate centered, but it's also, it's basically any asset that is less than 20-year depreciable years. So the car is definitely, I don't know whose car is going to drive for 20 years, right? Maybe, I don't know. But most cars definitely. And then also if you know, if you need to buy some equipment, computers, whatever, any asset you purchase to be used in your business can be 100% bonus depreciated. So in Rob's case, if you purchased in 2024, you can only do, I believe, 60%. But if you buy a car this year, it's 100%. But you also have to look at how many pounds, all those, you know, restrictions you're gonna look on the, you can talk to ChatGPT about those. Like the requirements of writing off your bonus depreciation, depreciate your whole vehicle. And you asked me whether there's any other low-hanging fruit. Home office is always one. A lot of people don't like to use home office because it's kind of an audit risk. But I would say if you do use your home, like I have doctors, clients that they call telemedicine, right? And they just stay home. They don't go out, they don't travel, and they have a pretty big area to spread out to do all the things they got to do. And that area is exclusively for business. So there are two requirements for home office. One is it's required by your job. So if you're a telemedicine doctor, where else could you do, right? The second is it's exclusively for business. You cannot say this is my living room. I'm sitting here watching TV. Later, I'm going to call patient. You have, and I believe most of the doctors will have a separate area, especially if they have kids and families, right? And that area, you just count the percentage of that area. Everything you spend in maintaining your home multiplied by this percentage is deductible, including depreciation on your home. So that's part a lot of people don't know. And that could be a big deduction.
Great. In terms of a couple other questions that maybe we could weigh in on, I know your agency helped me incorporate in Washington State, and I'm just wondering how much does this process vary by each state? Are there any states that throw up roadblocks or have excess expenses for folks wanting to go this route that we should be aware of, or things of that nature?
We do help people to register in all 50 states. There are maybe, I think from what I know is 5 states that not allow any professional like doctors, to have LLCs. So that's the restriction I noticed. And I know that New York and New Jersey is particularly difficult. New York and California normally is difficult, that they are difficult states to do business in, right? Other than that, the other step is after you register your company, the S-corp election is also pretty, the way the IRS doing it is pretty outdated. So you cannot really like do it online. So you have to mail it or fax it. And then you will need to get an acknowledgement letter from the IRS that you are an S-corp. And they only send you letters. There's no online portal you can retrieve that. And if you don't get that, when you file your first year tax, you will get rejected. And it's a battle with the IRS. And another last thing I want to mention is if you have an S-corp, if you set one up this year, your filing deadline is March the 15th, not April the 15th. And if you're filing your tax late, there is a filing late fee. You can eliminate that by filing an extension. So you'll get a 6 months automatic extension. Another thing, low-hanging fruit, is if you have an S-corp, the S-corp can pay the state income tax for you. That's also pretty nice. So what it can do is, let's say you have $100,000. I'm going to use my home state. It's easier to calculate. So Illinois is 4.95. So let's just use 5%, right? So I need to pay 5% of that $100,000 business income. So I have to pay $5,000. But I can actually pay it at S-corp level. And that will be considered as an expense at S-corp level. So when I file my personal tax, I already have $5,000 that the company paid for me. That's called a pass-through entity credit. It's also, when you make a lot of money, I have clients in New York, lawyers make millions, those PTET is huge. Because if you pay it out of your pocket, it's not a business expense. But if the S-corp pay for you at the state level, you will get it. And that expense is federally, deductible. It's pretty cool.
Great. If there are any other questions from the audience, there is, I believe, the Q&A tab where we got a few earlier. So if you want to type one out, feel free to do so now. Otherwise, I think I think we've covered most of what I was thinking about following up on. So I think that we can kind of call it a wrap if Rob agrees. Just want to say thank you very much to Justine. Very gracious of you to give us some of your time and guidance and put this presentation together on somewhat short notice. So thank you very much. I will say that her agency does offer a lot of comprehensive services and was really helpful in me setting up my S-corp this year, made the process very smooth and navigable. And I'd recommend them if you're looking for someone to help you out. Oh, we did just get one more question. Sandra Licky Tambo is asking if just wanted us to touch again on issues with SEP IRA and doing a backdoor Roth. My understanding is that you cannot have any balance in a SEP IRA if you want to do a backdoor Roth and not get taxed for it. That's just the way the law is written. Does that sound right to you?
It's mainly correct, Josh. Yeah, if you have any pre-tax dollars in any kind of IRA, like a rollover IRA, a SEP IRA, another traditional IRA you had when you were young, then when you do a backdoor Roth IRA contribution, when you do the conversion, you have to convert the whole amount. then it's going to be a big deal, right? Let's say you have $100,000 in your SEP IRA and you contribute 7,000 to, after-tax dollar to your, to the backdoor Roth. When you convert it, the whole $107,000 has to convert, and then you will face a huge tax burden, right? So that is why it's kind of like a word play. Do you see, Joshua? One is called a SEP IRA, one is called a solo 401k. So if you have any pre-tax dollar in 401k, who cares? Right? Nobody cares because it's 401k. So I tell people who come to me that they had SEP IRA before and they want to do backdoor Roth IRA. It's actually, there's a very simple trick. So you just open up a solo 401k. I mean, you all have some kind of LLC, right? Or you can just do a solo 401k as a sole proprietor. You don't have to have a business. I'm going to just have a solo 401k for Justine Zhou, right? And then I will move the money. I will roll the SEP IRA into my solo 401k. Now I don't have any money in SEP IRA. It's very simple, guys. And solo 401k, there's one more good thing is you can borrow from yourself. SEP IRA, you cannot.
Solo, this is probably a whole other webinar we would have to have, but so in terms of solo 401k, you can also do pre-tax employer and employee contributions, and you can design it in a way that allows you to contribute post-tax to a post-tax account and then kind of roll it over or transfer it into a Roth, which can allow you to, max out your 401k contributions with a Roth contribution that's much larger than the what you're allowed through a backdoor Roth. So another advantage.
Yes. You can do, like I said, you can do all the way to 70,000. If you are interested in the numbers, we can do an example. Let's say if you pay yourself 100,000, right? And you are 35 years old, so you can put away 23,500 as an employee deferral. And your employer can contribute 25,000 because I just said it's 25% of 100,000, right? So now you only use that 48,500, while the IRS has 70,000. So you have the remainder 21,500. You can do a mega backdoor Roth conversion. It's beautiful, yeah. But like I said, the pension is more beautiful, 225,000 up to.
Yeah, our doctors,
we make money first.
We got to get pay raises. Yeah. We got to get the companies to.
Perhaps for them. Okay, great. I think that's all the questions I saw. So unless there's any at the last minute, thanks very much everyone for attending. Thank you, Justine, and to your agency for the terrific presentation. The recordings from this session should be available on the AAEM website for folks to reference later or watch again later. And anything else from your end, Rob, or?
No, that's a great job, guys. I really appreciate it. I learned from it, and we'll keep doing this. So, and attendees, if you have subjects that you're wanting to hear about, please let us know. We would love to target specifically to our audience. Feel free to reach out. My email address is moremountainmedicine@gmail. That's MOHR mountainmedicine@gmail. And you can always reach Josh, or you can reach us through the AEM portal. Have a great one, guys.
Thank you, guys. Bye-bye.